Hi, I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a dear friend, someone who is freedom's friend, and someone who is your friend. He has taken an immense amount of grief over a number of decades because of him and his efforts in trying to get the people of the world financially secure and protected from whatever you want to call this entity, the criminal banking syndicate, the deep state, the shadow. It's all the same thing. They're a relatively small group of individuals. They want to strip you of your freedom and your financial resources. Bill Holter has been the tip of the spear. In fact, Bill Holter partnered for many years with the great Jim Sinclair, and Jim has since passed. And Jim was always known as Mr. Gold. And when Jim passed, that torch was passed to Bill Holter. And the reason is because Bill Holter has been one of the most outspoken proponents of sound money. In other words, money, currency, that is not debt, D-E-B-T, based. You can find Bill at Bill Holter, HOLTER.com. And in a nutshell, Bill, I believe, is the top forensic financial analyst in the world. Bill, welcome back.
Thank you for having me back, Dave.
So, Bill, I've taken some heat lately. Past 3-4 weeks on my radio show, I've mentioned that I believe something has fundamentally and significantly changed in the precious metals markets after me having watched them for a couple decades. You have a lot more experience in this than I do. A lot of people have come back to me and say, Dave, it's still manipulated. It's still, forget it. They're still running the show. Everything's the same. You're overstating it. So, Bill, you are the world's expert in this. So somebody's right here, somebody's wrong here. In your assessment, Bill, in looking at the precious metals markets, are things the same way they've been over all these years, or has something changed?
No, you're right. Something absolutely changed. And I would go back to, I believe it was the week between Christmas and New Year's when it was first advanced that they were going to take and confiscate the 300 billion of Russian reserves. And it was roughly 4 weeks ago. I could go back and look on a chart because the chart, gold started moving higher. The change that you've seen in price started roughly 2 days, 3 days after, I believe it was Janet Yellen put forth that $300 billion that has been sequestered, they want to use that to rebuild Ukraine. And I think the rest of the world heard that, thought about it, and said, hey, wait a minute. If they can do that to Russia, they can do it to us or anyone else. It's interesting in that you can see the flow going into Shanghai. There's been a huge flow. I think last month it was 123 tons or something like that imported through Shanghai. China last week made a decree, not a decree, but they basically told their citizens to buy silver. Now you're talking about 1.5 billion people. If every single Chinese person bought 1 ounce of silver, that'd be 40-50% more than global production. And I bring silver up because silver is the Achilles heel to gold. If silver blows, when it gets through $30 and starts running like a scalded dog, probably will meet some resistance at $50, chop around a little bit, and then it'll be gone. The Chinese understand if silver's running higher like crazy, it's going to really ignite gold. And they also understand that gold is the Achilles heel to the dollar. So basically it's a two-step process, if you want, of attacking the dollar, but not doing anything that could be claimed to be an act of war. In other words, if China came in and started buying up COMEX contracts, then it could be said that they're purposely trying to blow the metals markets. What they're doing here is just letting supply and demand take over. And while I'm talking about supply and demand, understand that there's roughly a $40 to $50 premium in Shanghai over the London and New York prices. So that allows arbitrage. And what I'm getting at is they buy gold here in the US, or they buy gold in London. They ship it to Shanghai, sell it $40 to $50 higher. They pay for the shipping, transportation cost, and there's a guaranteed profit on every single ounce. And what they're doing is they're booking a profit and moving gold from west to east.
Bill, when gold and silver in the past would be moving up, you would see the heavy hand of criminal manipulation enter with their algorithms, with their dumping of naked, unbacked, if you will, paper contracts to drive the price down. And when they would do that in the past, Bill, the price of gold and silver would get monkey hammered for weeks on end. Well, now, at least my observation, and maybe I'm off on this, is whenever they do try it, and they still do try it, the effect of when they try it is very limited and very short. And a good example of that is, I think on April 12th, it was a Friday, gold was shooting through 2,400, and silver was blasting up into almost hitting 30. And then all of a sudden, when the London market closed, which is minimally physically based, as opposed to China, as you've mentioned, is physically based, and their paper contracts essentially had free reign within, I think it was like within 3 minutes, there was a 4% drop in gold and silver. And in years gone by, that would have lasted for days, weeks. But come Monday, right, all of a sudden, things start going up again. So am I off on that assessment that when they do try their paper shenanigans, it's not working like it used to?
No, you're exactly right. It's not working like it used to. And Dave, if you went back 20, 25 years to the first, say 1999 to 2005, 6, 7, we would get these waterfall events, and it was pretty disheartening because those waterfall events would last 2 months, 3 months. The party, when you'd get a run up in the metal and then they'd smash it, and the party was over for at least 2 months, up to 3 months. And what you're witnessing now, and you can see this on a daily basis, you can see it on an intraday basis, where they come in, they try to hit the metal, they knock the price down, the price stabilizes, and then all of a sudden it goes back up. The smash you're talking about on this past Friday were already higher in gold and silver, significantly higher, 2, 3, 4, 5% higher than where they had pushed the price down on Friday. So I think what you're seeing is these smashes are being bought. And I think they're being bought fearlessly because they're being bought in the physical markets. They're no longer trying. No one's trying to fight the futures. They're not trying to fight the paper contracts. They're buying the physical, and as the physical market goes higher, the paper markets have to go higher. Otherwise, they're going to end up getting a call. I mean, let's say that the paper markets were 5% below. It could be way less than that, but say 5% below a spread between the cash market and the paper market. The cash market would say, hey, give me my metal. I'm exercising the contract. And then poof, the paper game is completely over.
And Bill, you've always said it's going to come down to a failure of deliver for physical metal. Exactly. You've always said that for years. Exactly. And people doubted you on that, Bill.
Well, people didn't just doubt me. People told me I was, a raving lunatic. But no, I mean, mathematically, that's where it goes. The tail can wag the dog for only so long until the dog itself gets big enough, the physical market, and starts wagging the tail. And you're watching the tail starting to get wagged now.
So, Bill, there's a financial journalist who's kind of been in the camp of the syndicate, if you will. It kind of always gives folks a heads up of what's coming through the syndicate, right? And it's this person by the name of Ambrose Evan Pritchard, right? So here's what he wrote.
Right.
Here's what he recently wrote, which to me was a huge tell, and maybe I'm off, but I want your input of what he wrote. He said, "Gold is sniffing out monetary and geopolitical dystopia. A powerful force is stalking the world's gold market, and it's operating in the shadows. None of the normal footprints are visible on the London bullion market or the Chicago Mercantile Exchange. Retail gold bugs have not been buyers. ETF gold funds have been shrinking since December. It's not a Western institution behind this. It's a massive player with very deep pockets. I've never seen this kind of buying before," said Ross Norman, a veteran gold trader. "Whoever it is, or they are, seems insensitive to cost. Central banks do not behave like this." He went on, "My bet is that a big animal with a Chinese accent is bracing for geopolitical or monetary disorder on a dramatic scale." Your take, Bill.
Well, I think that's 100% correct. And I don't think it's just China. It may have been kicked off by China, but you are seeing central banks all over the world buy. And I mean, it just makes sense. If China is a buyer, and we know that Russia has been a buyer all along, the secondary and tertiary BRICs nations are going to be buying without fear because they know they're on the coattails of the big boys. And that's as far as gold is concerned. Now, the biggest buyer in silver is India. Mm-hmm. They bought something like 130 million ounces just last month. That's just 1 month. And they are typically price sensitive, but what's going on now? It doesn't look like they're that price sensitive. They're buying weight is what they're doing.
Now, Bill, there's an organization called the Silver Institute, I believe, and they come out with a yearly assessment of supply and demand, right? And some folks have said, well, these guys kind of sometimes play for the banksters and they kind of underestimate things. Well, just the other day, they came out with an assessment that they believe we are in a supply deficit of silver of something like 265 million ounces.
Right.
That's huge, Bill.
Yeah, that is huge. And their numbers have been in the past suspect.
Yeah.
They've changed numbers without making any notification that they just miraculously the numbers changed. Last year they almost forgot about solar demand. And solar demand even now is 200 million, 300 million ounces. So, yeah, they're finally being forced to admit that there's a deficit, but there's been a big deficit for at least the last 3 years.
So, Bill, when we speak about wars, people think about Russia, Ukraine, they think about the Middle East, they think about potentially China and Taiwan. But, Bill, the real war underpinning all of these entities is the financial war that's occurring.
Right.
Educate our listeners about the financial war, because that's not something they hear about ever in the bought-off lamestream fake media. Who's at war and who's winning the war?
Well, simply it's the BRICS nations versus the U.S./West. I mean, that's who's pitted against each other. And just understand why the BRICS nations have come into being. They simply want to trade. They want to trade and have free and fair being the operative word, settlement. And what they're tired of doing is producing real stuff, shipping it to the US, shipping it to the West, and being paid in basically monkey money. I mean, it's fiat currency with no backing, and they fully understand that if the wrong light switch is flipped, the dollar goes poof, because you're looking at a treasury that is grossly insolvent. I mean, we can't even open the doors January 1st without borrowing another trillion, 2 trillion. They're borrowing $1 trillion every 100 days now. That's the treasury. Then when you look at the Federal Reserve, the Federal Reserve now has accumulated losses of $165 billion since late 2022. The last I saw, their equity in 2022 was $65 billion. So they've almost tripled losses of what their equity was. So now you're talking about not only the Treasury, but the Federal Reserve, the issuer of dollars. They are an insolvent entity. And going one step further, it came out this past, I guess, Monday or Tuesday, that DEI and wokeism is prevalent within the Fed. Now, you got a twofer there. You got woke and broke.
So Bill, play this out, right? Let's look, because many people say, all right, well, so yeah, okay, the BRICS countries are gaining more and more ground. Dozens of more countries want to join BRICS. There's talk that BRICS is going to issue a trading currency that's based in their own currency, if you will, or currencies related to BRICS, exclude the dollar, exclude the SWIFT trading system, or payment system. Bill, play this out. BRICS, the countries actually were just in Washington in a kind of a secret meeting with power, the old power brokers, if you will, the old management team this past week. And reportedly the BRICS countries have a meeting amongst themselves in May. So play this out, Bill. What do you see happening here?
Well, the dollar is, and you can see it in clearing numbers, the dollar is settling less and less trade. And these BRICS nations understand what we just talked about, that you've got an insolvent treasury, you have an insolvent Federal Reserve, and they fully understand that the dollar at some point in time is going to go bye-bye. And even today, if you look at the average central bank across the board worldwide, 60% of their reserves are held in dollars. So what you have is you've got fear on the part of central banks of many of these BRICS nations. When I say fear, they have fear that their dollar holdings are going to become worthless and create a big black hole of default on their balance sheet. So the reason for them purchasing gold is to put something in or on their balance sheet that will explode in value as the dollar implodes in value. I mean, it's just natural. Nations are going to do whatever's best for their own nation. Generally speaking, for worldwide. The U.S., that's a different story. Because we don't do what's in the best interest.
No, I mean, as you mentioned earlier, the Chinese government is telling its citizens, buy silver. Essentially, protect yourself. Buy silver. The U.S. government has never, those words have never crossed any government official's lips.
Yeah, and Dave, while we're on this topic of doing what's right for your country or your citizens, we should probably spend a couple minutes anyway talking about the great taking.
Yeah.
I've looked at the laws that have been written. That is David Webb's writing, The Great Taking, is not speculation. It is basically reporting on the way the laws have been rewritten. And I read I think it was part 1 of 3 parts. I haven't seen 2 or 3 yet, from Paul Craig Roberts. But he asked the question, were was all of this pooled collateral put together to support the derivatives complex? Because remember, that's a $2 quadrillion complex. Mm-hmm. So there's got to be collateral under it. So was the collateral put together to support that complex, or were derivatives put together to blow up and then take the collateral? So I think that's a great question.
It is.
And I think the answer to the question is, yeah, derivatives were created to ultimately blow up the system. They've changed the laws so that your stocks, your bonds that are held by, XYZ broker, the bank, the insurance company, or whatever, those are no longer your property. They're the banks, the brokers, the insurance companies' property, quote, for your benefit. But in the court of law, for your benefit doesn't mean anything when the senior creditors are entitled to your what the collateral that you funded, that you deposited into the bank. Remember, when you deposit money into the bank, it's no longer a deposit. You're lending money to your bank.
Bill, many people have the fallacy that this could never happen in the United States, these what are called bail-ins that you just described. In fact, Bill, in 1907 and 1908 in this country, and my great-grandfather has his business taken from him by the government on a bail-in when the savings and loan industries were going down. And it has happened before. They just don't want people to realize this has happened before. But it has happened before. And now, as you say, the laws have even been more rewritten since then that makes it easier for them.
Well, it makes it impossible for you or I to sue anyone to get our monies back.
Right.
Because by law, they're not our monies. As soon as you turn them over, they're no longer yours. They are on the balance sheet of whatever entity you put the money into.
And Bill, you've always said over the years that these criminals running the syndicate, every once in a while, they'll give you a heads up of what's coming. Well, there's a couple things that came out. I want your take on it. The first was from the World Bank. And when I read it, the first person I thought of was you. I said, did Bill Holter write this? Here's what the World Bank released in their handbook to asset managers about how to invest in gold. Quote, in the modern era, gold continues to play a critical role in the global financial system, serving as a hedge against inflation, a safe haven asset, and a reserve asset for central banks. Gold remains a crucial component of the global financial system and is likely to continue to play an essential role in the future, end quote. That was the World Bank.
Right. Which, if you know anything about the World Bank, the IMF, any of them, they've continually, year after year after year, downplayed gold. But as you mentioned, it seems to be a code of ethics amongst the evil elite that they have to warn you first. They can't just kill you. And if you don't heed their warning, then that's your fault. It's not their fault. So their conscience is clean and you're dead.
You mentioned the IMF, the International Monetary Fund. Here again, I thought Bill Holter hacked into their computer system and issued a communique. Here's what they said recently. Quote, gold bullion is not a claim. Oh, geez, Bill, they're talking about counterparty risk. Wait, and does not have a corresponding liability. It is treated as a financial asset because of its special role as a means of financial exchange and international payments by monetary authorities and as a reserve asset held by monetary authorities. Bill, you've been saying that for decades and have gotten nothing but grief.
You're right. I've been, shit on for years and years for saying, gold has no counterparty risk. It can't default. And when everything is said and done, gold and silver will be the last two men currencies, if you will, standing because they cannot default. And I do want to mention the IMF over the years, and I think going back to about 2016, 17, they've probably issued now about 25 or 30 warnings So they really have been on the stick. If you've listened to the IMF, they have been they have been telling you basically the truth that things are not rosy. And I think the BIS just came out and said that banks need to move faster in raising their reserves to meet the Basel III requirements.
So while BIS is doing that, and the IMF is saying, heads up, the Federal Reserve, the Central Bank of the United States, Federal Reserve refuses, and they say they're transparent, refuses to provide records of foreign gold holdings, let alone the United States gold holdings. Bill, here is something. I just had a conversation with somebody about this, and they accused me of lying. Okay? Here's what they accused me of. They said, well, the United States is actually fine because we have all this gold at Fort Knox and other places in the United States. So I go, how much gold do we have? Well, I don't know, thousands of tons. I go, I'll make it easy for you. They tell us we got 8,300 tons. I go, when do you believe the last time it was audited? Well, I don't know. Probably gets audited every couple of years. Here's what Bill, and I said, well, one would hope that would be the case, maybe even every year. But in fact, it was last audited, last I can determine, and you have at me, Bill, is in I believe 1956.
Exactly correct.
And this person said, Dave, you're lying. You're creating fear porn by saying that. I said, well, it might be fear, but it's fear reality.
And that's why you don't argue with the ignorant.
Yeah, but so Bill, some people say, well, what's the importance of that? What's the importance of that? Well, no, it is very important. Educate our listeners.
Yeah, it's absolutely important. You go back 100 years ago, gold was dollars, euros, yen, et cetera, et cetera, et cetera. All of these currencies were all derivatives off of gold and silver. In other words, they were paper receipts for underlying gold and silver. And at this point, what's underlying the global financial system are U.S. treasuries issued by basically an insolvent entity. The Federal Reserve does not want to tell anybody how much gold or if any gold is moving in or out, because that gold is moving out. If you remember back in, I think it was 2013, Germany asked for 300 tons of their gold that was held in New York. And they were told, well, it's going to take 3 or 4 years to do it because it's just so heavy and just so dangerous to ship. Oh. Well, I did the math at the time, and the Boeing 747 cargo planes can hold, I think the number was 95 tons is what they can transport. So they could have done it in three transports with a little overage on a fourth plane. But it took them 3 years or 4 years to get that 300 tons to Germany. And guess what? It was not the original gold. The gold that Germany received did not have the same serial numbers as to what was deposited. So what does that mean? Well, it means that something happened to their gold, and it took the U.S. or took the Federal Reserve, whatever, it took them 3 to 4 years to scrounge up 300 tons to satisfy Germany. And with what's going on, obviously the BRICs formed for a reason, because they don't trust the solvency of the U.S. from top to bottom. And it just goes to, it's logical that you would have foreign governments saying, hey, it's been nice having our gold with you all these years, but please send it to us. And the Federal Reserve doesn't want people to understand or know that there's a lack of faith in that institution by other foreign central banks and sovereign treasuries.
So, Bill, if we look across the board, many people say, well, these BRICS countries, okay, they're going to back their new trading currency, let's say, in gold and silver. do they have gold and silver to back their trading currency? Bill, if you had to estimate right now, rough estimate, can you give us what you think potentially Russia and China, just two of the BRICs countries, have in gold and silver at their disposal?
I would guess Russia, because remember, Russia was bankrupted in 1989, 1990. Then they were raped during the 90s financially. My guess is Russia probably has, I don't know, they have more than what they say they have. I'm guessing they probably have 3,000, maybe 4,000 tons, maybe more. But China's the big one. Just on the back of a napkin, I can show you that remember, China mines 400 tons per year. Okay? None of that gold leaves the country. And they've been mining 400 tons a year since what, 2010? So call that 14, 15 years. That alone is close to 6,000 tons. And they're claiming they have, I forget what the number is. I think it's under 3,000 tons is what they're claiming. Just on the back of a napkin, looking at their production and the gold that has come into Shanghai and not left the country, it's an absolute lock that they have 25,000 plus metric tons of gold.
And Bill, many people say, okay, so the BRICS countries back their new trading currency with physical gold and physical silver. Well, the United States can do that too. They can back the dollar. Whoa. My first question is, if we could do it, why haven't we? Number one. So, Bill, if Bill and Dave decide to look through all the government vaults, and we're looking for silver to begin with, then we're going to look for gold. But when we look for silver, Bill, how much do you think we're going to find in the government vaults of silver?
Oh, I don't think you'll find anything of silver. I think the last big silver hoard was 2 billion ounces from the Manhattan Project. And that over the years has been used in the suppression scheme. As far as gold is concerned, your guess is as good as mine, but I wouldn't guess that there's more than 1,000 tons.
Yeah, 1,000 tons at most, right? So,
right.
So when you come to the table, it's a big game of poker, and every ounce of gold is a chip. When we got Russia over there, let's say 6,000 tons. And we got China over here, 25,000 tons. And then we got the U.S. with, who's really going to be the reserve trading currency out of that poker table when everybody stands up?
Well, when everybody stands up, the true reserve, the backing to the reserve currency is going to be gold.
Yeah.
That's the bottom line, is either you've got the gold or you don't. And let me explain to people that are listening to this that at that table, they're going to be discussing cross-currency valuations. And if you have Russia, you have China, you have BRICS nations that have accumulated gold, and you have the United States who says we have 8,300 tons, and the reality is a very small percentage of that, not to mention there's German gold, there's French gold, there's Italian gold that are held at the Fed, and they won't tell us, that's not audited, they won't tell us what's left, what's been shipped out, they won't give any balances. What this means from a currency standpoint is once we have this reset, countries that are issued by countries that have gold will be strong, and currencies that are issued by countries that do not have gold are going to be weak. Now, the ramifications, obviously, if your country doesn't have gold and you have, quote, a weak currency, I've just described inflation, because that means your currency is going to buy less. Stuff is going to cost more. So it's an inflationary event for the things we need. It's not an inflationary event for the things we have, because credit the things we have, when I say the things we have, stocks, bonds, real estate, etc., those things have been bid up in price over the years with the use of credit.
Debt.
And all of a sudden, there's a questioning as to the validity of the dollar, or the validity of the euro, or the yen, or the pound, or any of these Western currencies. If those currencies all of a sudden weaken versus the rest of the world, what does that do to the credit markets? If they're afraid of the currency, they're going to be afraid of the bonds also. And as those bonds get sold off or not bought, interest rates skyrocket.
And we're seeing that now. We are seeing some of that now, aren't we, Bill?
Exactly. That's already happening.
Yes.
And I was asked the other day about, well, it doesn't look like, commercial real estate's starting to have a problem, but housing's not having a problem. Well, if you look at the closings, they're down like 50%.
Right.
And price always follows volume. And I mean, just from a mathematical standpoint, if you earned enough 2 or 3 years ago when rates were, 3.5% mortgages to qualify to buy $1 million house, and you still have that same income with 7.5% mortgage rates, you qualify for only $500,000 or $600,000. So what it's done is it's undercut the ability for buyers to step up and buy what's so far coming on the market, but what's going to be coming on the market. Because people can't refinance, and that's a problem.
And as you've always said, there would be this daisy chain event that would be a credit-based event. And
Exactly.
we're seeing, as we said, we're seeing that now, Bill. We're seeing that now.
You're seeing the start to it now.
Yeah.
The true daisy chain, in my opinion, is going to be a 72-hour event. I have no idea whether it's a bank, whether it's a broker, whether it's a country. I mean, I have no idea where it's going to come from, but somebody's going to be exposed as bankrupt and defaulted. And it'll obviously be an important player, but then you've got to look at, and this goes back to what happened in 2008, 2009, where people were dreadfully fearful of who's their counterparty. They wanted to know who the counterparties were, because then you don't want to do business with their counterparties. And then you don't want to do business with their counterparties, and that's how it spreads. And I've said this many times, but once we get to that point, you got 72 hours before everything closes.
And again, they gave us a hint. The head of the FDIC, the Federal Deposit Insurance Corp, recently came out of nowhere and said this one, right? Said, well, we're preparing and actually prepared to handle a collapse of a major Wall Street bank. Now, before it was all these like second and third tier, fourth tier, Silicon Valley, crazy investment bank. Those guys are, But now the FDIC chairman, unprodded, came out and said, well, we're preparing for a major wall. And Bill, I think he's telling us the part of the daisy chain is going to be a major Wall Street bank. And it could well be because, as you mentioned earlier, of their derivative positions, many of which are based on the wrong side of the precious metals.
Well, yeah, that's another thing, is that the price of gold and silver going higher is causing margin calls.
Yeah.
Because leverage in gold and silver is to the short side. The leverage in everything else across the globe is to the long side. In other words, the average person, the average bank, broker, etc., they buy stocks, they buy bonds, they buy real estate, and they use leverage, they use credit to make their purchase. Whereas with gold and silver, if you look to see where the leverage is, it's to the short side, and it's stupid to the short side, to the point where there's more than 100 fake paper ounces represented for only 1 real ounce in existence. So what you saw in the nickel market a year and a half ago, where the price doubled within 48 hours, and then they had to cancel all the trades, close that market for a spell to get order back. That market doubled in 48 hours because the collateral didn't exist that was supposed to be there. So you had a massive short squeeze, and that's what you're going to have in gold and silver. You're going to have the reverse. The margin calls are going to make gold and silver go higher, not lower. And margin calls are going to make every asset on the planet, other than gold and silver, go lower.
Because people have to sell those assets to get their get money to pay for their bad positions they have in gold and silver that are going south on them.
Well, not just that. I mean, if you've got a stock that you owned at $100 and now all of a sudden it's 60,
right?
You're getting a margin call. You got to put more margin in to hold that position. So I mean, it's a margin call from all directions, but the only 2 things that will benefit from that margin call are gold and silver.
So, Bill, you've been doing this for decades, as I mentioned. When you look at where we are today and where we've been in the past, how close are we to this all playing out as you've described? A failure to deliver and a credit event.
Yeah, and that's all going to happen at the same time. And I mean, I think we're right there. A couple things. One, this is an election year in the United States, and we've talked about this before. I think there's less than a 50-50 chance that we even have the election, because those who are in power, I don't think there's a groundswell of populism. I don't think there's any way they can cheat enough to win. Mm-hmm. And if they lose, then they're worried about going to jail. Mm-hmm. So is our purposeful false flag? We've got obviously war around the world now. You've got Israel, Iran, you've got Ukraine, Russia, so you've got that. I think we're very, very close. And I think what you're watching now, gold and silver are sniffing that out. And we're actually in the end of the empire.
Bill, final question. What do you see as being the final, the flare that goes up in the air that says, it's happening? Is there something that you look for in the financial world, financial data, where you go, that's it, game, set, and match? Everything I've told people for decades is happening right now. Is there some early warning sign that you and other folks can look at and go, oh, that's it? Like the 2-minute warning, if you will?
Yeah, I don't know if there's a singular thing, but I would say 2 of them would be the price of gold and the price of money. And when I'm talking about the price of money, I'm talking about the 10-year treasury. And I did say that from an economic standpoint, that 3.25 on the 10-year treasury, you would start to see things start to choke and spit and cough. Well, as soon as we got through 3.25, which equates to, call it 5.5%, 6% on mortgages, all of a sudden the volume started to dry up. And as I said, we're at 50% now as far as closings are concerned. But I think, those 2 things together, I think if you significantly saw rates go through 5% on a 10-year treasury, or if you saw gold, I really don't even think you need to have gold much higher than it is right now. But I would add, if you saw silver through $30 and it's starting to run, you're definitely going to be lighting a fuse, a bigger fuse for the second, third rocket boosters on gold. Gold running higher and interest rates running higher at the same time, it's over, because this is the most leveraged system in all of history. And I think it's been done on purpose, Dave. This is not a mistake.
No, it's not.
None of this is a mistake.
I agree.
They got the United States, they got the West completely indebted. And what's the best way to financially blow up a country, get them indebted, and then raise the interest rates on them, and at the same time make gold at, start pricing gold at levels where you can never catch up. You can never, you can buy 1,000 tons of gold. First off, it doesn't exist to buy, but price wise, you go back 20 years ago, you saw gold at $300. Now it's $2,400. It's almost 10 times, 8 or 9 times what it was then. I just think the whole thing has been a plan. And, the United States, the rule of law, I think we've been in the crosshairs.
Bill, you are a representative, a trader broker for Miles Franklin, a bullion company. Give us, I said final question before, here we go. Here is your final question. Give us your take on where we are on the supply side, what you're seeing, because you're right on the front line through Miles Franklin. Where we are on the supply side and where we are on the demand side from retail investors, because a lot of times the retail folks don't quite get it right of the buy and sell timing.
Right.
Yeah. Give us your take. Where are we on supply? Where are we on demand?
Yeah, a year ago, demand was crazy. You had the problem with the 3 or 4 banks. And by the way, they weren't small banks. If you total those 4 together, there were more assets that went down than in all of 2008, 2009. But at this time last year, I was literally on my phone plugged into the wall because I had no charge left on my phone. I mean, I was opening 5, 10, 20 accounts every day, and they weren't huge trades. Some of them were good-sized trades, but retail was going crazy. Premiums went crazy. The U.S. Mint did not mint enough Silver Eagles for sure. That's why premiums went nuts. Gold Eagles, the premiums went up a little bit, and they didn't quite mint as many as they had in the past, but that's what supply and demand will do. Here we are a year later, and premiums have collapsed. I mean, premiums are now as low as they were back in, 2017, 18, before COVID. Premiums are as low as I've seen in many years. And that's a function of the retail buyer is not buying. Now, what is happening, we're not getting the $10,000, $25,000, $50,000, $100,000 trades. We're getting calls from primarily existing clients and primarily older people, say 55, 60 years old and older, with big orders, 500,000, a million, 2 million, 5 million. We're getting big orders, but we're not getting peppered with the small orders. And a lot of the commentary, I guess to paraphrase it, a lot of the commentary from these people that are moving big money out of the system, their comment basically is this country's done.
Yeah.
And that's why they're doing it.
Right.
So from a supply and demand standpoint, the demand, I'm going to say dollar-wise, is probably up a little bit just because the orders are so much bigger. But the amount of orders is way down. And supply seems to be pretty good in everything but Silver Eagles. And again, that's a function of the U.S. Mint not minting enough Eagles to meet demand, which is what the law says they have to do. And, year after year, they don't.
Bill, educate our listeners and followers and viewers how they can follow you on a daily basis. Great content, how to get in touch with you in case they want to talk to you more about precious metals. Sure.
You can go to my website. It's just about a year old now. It's simply billholter.com. Or you can, and there is a contact button on the website, or you can contact me directly. My email is bholter@proton.me.
bholter@proton.me.
Exactly.
Bill, I'd like to thank you for everything you have done, are doing, and will do. And I'd like to thank you for holding the line when it comes to the truth. You have been just attacked ferociously, I might add, for the truth that you've brought forward over all these years. Many people would have just said, you know what? I know I'm right. You know what? If they can't take the truth, I'm out of here. I let them fend for themselves. And I thank you, Bill, for not letting people fend for themselves, for continuing to deliver honest information, truthful information, and information that has been well ahead of the curve, and in the process has helped people, protected people, based on this onslaught that has occurred and is occurring and will only escalate in the days and weeks to come. And I thank you, Bill, for everything you have done, are doing, and will do. And I thank you folks for joining us. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for your time today.